Hello and welcome to Donna Chien Investment. This analysis is for Gilead Sciences on Nasdaq as of 4th of August 2026 with a share price of $132. The full report is on donnachien.ca. Gilead is a cash-rich antiviral leader with the world's leading HIV franchise and no major loss of exclusivity until 2036, trading in the attractive band. The short-term call is a hold. Q2 earnings land tonight, which knocks out the entry, so there is no confirmed buy yet. Medium-term is buy and long-term strong buy. Accumulate on weakness, buy on confirmation after the print. The quality here is real and unusually durable. Gilead earns net margins around 31% and gross margins near 80% on roughly $30 billion of annual revenue, and it throws off heavy free cash. What sets it apart from most large pharma is the patent runway. The flagship HIV franchise, Biktarvy, has no major loss of exclusivity until 2036, so there is no meaningful near-term patent cliff to fall off. That funds a fast diversifying pipeline and 11 straight years of dividend increases. Low single-digit top-line growth is the only real soft spot. On valuation, it screens cheap for the quality. The shares trade at about 13.7 times forward-adjusted earnings against a warranted multiple of roughly 19.5 times, a ratio of about 0.7, squarely in the attractive band. The free cash flow yield is near 5.7%, which funds a growing dividend at a 44% payout with room to keep raising. Consensus fair value sits at about $158, though Donna Chien flags that the most recent analyst targets have drifted lower into the mid-140s as the stock recovered, an honest caveat. So why not buy today? Gilead reports second quarter earnings tonight after the close, and that print knocks out the entry. The fundamental group is blocked by the earnings blackout. There is no volume-backed technical reclaim, and no catalyst has resolved, so the entry ladder is a wait, 0 of 3. The medium-term call also eased from strong buy to a plain buy this run, but that is a macro positioning change, not the business deteriorating. The newest macro report no longer carries Gilead on its watch list, so its economic alignment falls back to the healthcare sector map, where the medium horizon is neutral with no amplification. The long horizon stays strong buy because defensive healthcare is a long tailwind. The plan is to buy on confirmation after the print or on a bounce toward the 121 to 127 zone. The risks are real, and they are why the bear case exists. That bear sees the shares fall to about $112, roughly 15% below today, on a mix of oncology setbacks, an adverse drug pricing ruling, or a risk-on reversal that unwinds the defensive bid. The nearest risk is tonight itself. A weak Q2 print could gap the stock lower before any entry. The oncology worry is not hypothetical. The Trodelvy cancer program has been an uneven bet. The deeper thesis risk is the HIV core, a long-acting rival from VIIV taking share, or a price cut on Biktarvy or lenacapavir under the drug pricing rules. One reassurance, with a beta of 0.34 and no AI exposure, Gilead does not carry the market's concentration unwind tail. Its bear is its own, not the index's. Now weigh the risk against the reward. The bull case is roughly 36% above today, the base case, the most likely, about 15%, and the bear case a fall of about 15%, so you are risking about 15 to make 36. So, our call on Gilead Sciences, on Nasdaq, hold. Remember, this is for education, not financial advice. Always do your own research. This analysis is by Donna Chien Investment at donnachien.ca. The link to the full report is in the notes below. Have a great day.